we've got to talk about Alibaba, I guess. Because this has just been the absolute. I mean, we already have been talking about it over the past few podcasts.
Yeah,
we'll talk. Hamish, you were talking about it when you were talking about Chinese regulation of big tech. But my gosh, Alibaba is just the flavor of the month, or the flavor of the last year or so in terms of value investors, or maybe the last 3 or 6 months. So who we got now? We got Charlie Munger. We got Mohnish Pabrai, Guy Spier. Actually, Tom, myself and Hamish, was it on air or off air? I can't remember. Last week, we were discussing what percentage chance, because we hadn't got Buffett's 13F yet. We were like, what's the chances that Buffett's bought Alibaba? And I think we both said probably pretty unlikely, but I think we both gave it like a 20-ish percent chance.
Yeah.
And I think because we said, well, Charlie Munger's bought into it. I mean, they're pretty good buds. So, I mean, from your perspective, I understand you've done a fair bit of research so far on Alibaba, and you've obviously been following the super investors that have sunk money into Alibaba. Like, why? Why is it the flavor of the last couple of months? Is it because there's no other opportunities? Is it a really good business? What do you think's drawing them to the stock?
Yeah, I think seeing Charlie Munger go into it in the Daily Journal Corporation, because he was sort of the first one. I think there's sort of a flood of super investors have kind of followed that. And yeah, I mean, upon doing a bit of digging, it is a really good business. Like it's grown revenue at something like 50% a year compounded for the last decade. It's got a whole suite of e-commerce businesses in China, and actually in Southeast Asia and some other places as well. It's got Ant Financial, which owns Alipay, which is like, I think their user number basically matches the number of people in China that have a connection to the internet. So you get a 1/3 ownership stake in that as well. Wow. And then you've got this relatively small in the grand scheme of Alibaba at the moment, but you've got a very fast growing cloud business, again, growing at like 50% a year or something. So you get all of that, and then you sort of run some discounted cash flows or look at some, basic valuation metrics on Alibaba, and relative to their growth, and of course they're not going to grow at 50% a year forever because they're already huge, but even if they can grow at 10 or 15% a year, maybe, like by my maths, it looks pretty cheap. That's not a stock tip or anything, but that's kind of where I've arrived. Yeah. I guess the giant red flag hovering over it, and the reason it's down so much recently, is just political risk, basically. And is Alibaba going to get delisted? Technically, if you buy Baba on the New York Stock Exchange, you're buying into an entity in the Cayman Islands. So do you even actually own Alibaba? Like that's not a new thing, but it kind of has been brought into the limelight a lot more recently. So there's kind of lots of red flags, I guess, or lots of things kind of hovering over Alibaba, which scares many people away. But I guess you've got the value investors who have been listening to Buffett say, buy fear and sell greed for the last 50 years, and maybe they think this is their opportunity. So
yeah, it's an interesting one. Hamish, do you have any thoughts on Alibaba? Not really in your zone.
I mean, yeah, not really. I mean, if you just at a very basic level look at its valuation, you can see that, I mean, given if it grows at, mid-teens, that it will probably do extremely well for you. But then the question is, do I understand the business well enough to know whether mid-teens is reasonable? And beyond that, are there other uncertainties such as government intervention that just might completely shatter that ability to grow? And for me, there's just so many question marks. So
yeah, fair.
It's not, I've said this before, and I have to say it every time I talk about a business that I don't want to invest in.
You're shorting
it. Doesn't mean
Hamish.
I think, I'm not shorting it, okay? Off air, Tom, okay? Not on air.
Oh, sorry.
Gosh. Yeah.
No,
we have our on-air opinions and our off-air opinion. Jeez, that would be so dodgy.
That would be horrible.
There probably are people that run podcasts like that, though, to be honest. But no, it is interesting. And to be honest, this is probably not the right way to think about it. But the thing that kind of gives me a little bit of comfort about the whole it's an ADR, the whole Cayman Islands way of investing through into Alibaba. The only thing that gives me a little bit of comfort there is that that's the way that all of the big US value investors are investing in it, right? They are buying Baba, the ADR. Is that right, Tom?
I mean, that's all we can see. So, I mean, there's a chance they're also buying it on the Hong Kong Stock Exchange, and we wouldn't see that.
True,
Who knows?
yeah.
But yeah, there's a long list of people buying the US listed version of Alibaba. That's for sure.
Right.
They might be buying the US listed version, shorting the US listed version for the same amount. We can't see the shorts, and then buying it.
Oh my gosh, this is elaborate. This is elaborate. They've all figured it
It's all a
out.
ploy.
They've gotten together. And then they're like, hey, so Charlie's going to start us, right? So Charlie, you make your invest. Then Mohnish is like, then I'll come in second. Guys like, I'll come in third. We're going to pump the hell out of this stock. And then just when all of our value buddies are on board, we're out.
The greatest pump and dump scheme of all time.
Well, the pump's not working very well from what I could see. So it's not playing out.
It's going south and it just keeps going south.
Yeah.
But I guess that'll, assuming that they haven't maxed out their positions, I imagine all of these investors are going to continue to buy in. They've already started and it's just getting a better deal. So I think the next 13F will be telling, especially now that I think it's dropped down to the 170 range, if I'm not mistaken.
Yeah. Well,
yeah, 172. And when Charlie started buying, I think it was in the low 200s.
I think about 220s, 230 maybe.
yeah.
Right. But it's getting cheaper and cheaper. So I would be interested to see what kind of buy numbers are on Alibaba in the Q3 13Fs.
Yeah.
That will be very interesting.
Well, even this quarter we saw, because Mohnish Pabrai entered into Alibaba in the previous quarter, not the last one. And this quarter we saw, I think he increased his position by 50%, if I'm not mistaken. So that's already kind of an example of what you're talking about, where you've already seen one big investor upping their investment as it's come down. So yeah, we may continue to see that from a few others going into the next quarter. Such a long time to wait, 3 months. Wish they had to do it every month
day
or something. Just a live counter. What?
Kathy
just
Wood.
bought-
Well, that's what it is.
Isn't that a Kathy Wood move?
What's that?
To publish your trades every day.
Yeah, that's it. It's an
Does she do that?
Yeah.
interesting approach.
I did not know that. There you go. And for those that want to learn more about Alibaba as a company, Tom, what's the book that you read? And do you want to maybe take us through, because I'm yet to read it, but I really do want to read it, what that book was and maybe what are some of the takeaways that you got out of the book?
Yeah, sure. So that book you're referring to is called, what is it called? Alibaba, the House that Jack Ma Built. I think it's by Duncan Clark from memory. So Duncan Clark's former investment banker, has lived in China for about 20 years. And it's actually funny, I was listening to Duncan Clark give a talk as part of his book tour when it first came out. And he was actually offered options, in Alibaba as part of his investment banking work in like 1999 and turned them down. And he's like, man, these would have been worth, I forget the number, but it was like $50 million or something. And he's like, so I hope the book sells very well to make up for that. But yeah, that's a really good book. It kind of goes through the story of Alibaba. Well, Jack Ma initially, actually, and kind of his upbringing and a bit of his early business failures, actually, and kind of like discovering the internet and going through that kind of part of his life. And then, yeah, it goes into the business of Alibaba, talks through something they call the Iron Triangle, which is what I would describe as their moat. So it's kind of this combination of their e-commerce businesses, their logistics advantages, and then basically Alipay, their kind of financial arm, all sort of working in harmony to allow them to, grow as well as they have grown. So that was one of the key takeaways, I'd say. Definitely learned a lot about Jack Ma, and also just learned about a lot of the kind of stupidity that that people that are not living in China but want to get Chinese exposure. Like, for example, there's a really good story in that book of eBay trying to come into China and just completely screwing it up like you would not believe.
Right.
And it just goes to show, I think, the fact that like all the American e-commerce businesses basically have no chance in China, was my takeaway from that. Like, I mean, one of Alibaba's major e-commerce platforms is called Tmall, and like Amazon have a store on Tmall. That's kind of the point we're at with Amazon trying to compete in China. So,
right.
Yeah. Really good book. Definitely recommend it.
The same thing actually rings true with Alipay and their payments business, because Visa and MasterCard they dominate everywhere, but they're actually banned in China. All payments are processed by a government-run body in China. So what people in China have done as a result of that is they use things like Alipay, which basically operates as a digital wallet service. They're not actually processing or facilitating transactions between banks. But that's like another example of where their payments business is completely dominant in China, and Visa and MasterCard actually cannot operate in China, which gives them a massive advantage in that market, and then they can maybe use that advantage to spread it elsewhere as well.